We're live.
All right, we're live. Hey guys, welcome back to the Capital Mindset live stream. I have here with me Andrew. You guys know him from the club. And we're going to be doing the public portion of the live stream here with you guys here today. So what that means is essentially after we're done here, we're going to move over to the private icon that we'll host on the club. So the topics of today are in the description, but as you were
want to
saying,
start by a quick disclaimer. If you're in the club and you know things specific to the club, I don't need you going around and shouting out every single holding of the club. If you could, please. Like I don't think we mind like talking. Yeah, we hold this, we hold that, but like, don't start going through and saying, "Hey, we're going to talk about XYZ stock." Like that'll be for the private stream.
Correct. Yeah, correct. Okay, so we're going to be discussing first last week's earnings, and I guess we'll start off the bat regarding what companies we both thought were quite interesting. So I'll start off by, I guess, asking you: did you find any of last week's earnings interesting?
Oh,
anything
yes.
that stuck out to you?
Did I find any of last week's earnings interesting? Well, let me tell you. Okay. Oh, this
better
is
question. Were any of them boring?
Yeah. So let me pull up. Let me just pull up the earnings whisper. Whoops! Did I put the same one in twice? The one from last week is what I wanted to pull up. I thought I had. Let me see here. There we go. Okay. So let's pull this up, and I'm just going to share screen. Oh, you?
No. I'll share yours.
So. There we go. So for me personally, there wasn't a ton of stuff on Monday besides the fact that I always think Bank of Hope is the funniest name. I go, it sounds like it's something that's made for like people that are destitute. Outside of that, nothing really super interesting for me personally. You know, these are mostly. I didn't really look at Logitech. I would assume that would say like what the office. If return to office is impacting anything, or if people are buying, you know, because that's more diversified than like say a Corsair. And on Tuesday, obviously Alphabet was a big one. As we all know, Google is now dead. From the
from the title.
Yes,
Google is dead.
Yes. and I think there was some legitimate reason that people are selling off on it that we can maybe talk about later. But let me just go through and say things I thought were interesting. I heard, I didn't look at Spotify's report. There was so many to look at. I heard that their margins actually improved, which might be interesting if that's the case. Teladoc, not interesting. Meta was interesting. I thought Meta and Google both had, Microsoft too, both were really good indicators for the ad market. But following the reports, the ad tech stocks sold off, which I thought was weird. Because I thought they were both very bullish. ADP I found interesting. You know, payrolls, just seeing what companies that are hiring, like how they're doing, and they seem to be doing pretty decent. Hershey was another one that I thought was interesting. Coca-Cola. Yeah, I mean, like I could go through a lot of these, like to say interesting, but
I want to ask you a question. Can I talk about ones that thought were interesting, but not necessarily in a good way?
Yeah.
So right off the bat, I'll kind of go backwards. Friday, do you see that company Newell Brands?
Yeah.
You know their brands?
No.
Like Sharpie, Elmer's glue, etc.
So they're everything you sniffed in high school.
Yeah, exactly.
Okay.
So with those guys, I've been following them for entertainment purposes for the most part, and they were an Icon investment. He was attempting to turn it around. I don't really follow it too in-depthly. I believe Carl Icahn. I believe he's out of the investment, but it actually crashed about 10% on Friday. And from what I saw, it's a really beaten down stock. This was another example or case study of a value trap, dividend investors piling on into here. The yield is still quite high. I know they cut the dividend. I'm going to share my screen here in a second. Here, so you guys can see it and catch up.
What? I don't know if we want to get to what happened. It seems like a solid staples that they have, like Sharpies, Elmer's glue.
essentially, I'll give you like the not the long story short. So going back in the day, I forget the name of the company. They acquired another consumer brand staple business, and they were trying to buy up and grow with a bunch more brands. The CEO at the time was pitching it as a good idea, a good expansion, saying it's high quality brands. Long story short, you fast forward a little bit after that, was not the case. A lot of those brands were actually much lower quality. They diversified the business. They started to have a bunch of inventory issues. Here, I still said I was going to share my screen. Okay, let me just present window. And boom, here we go. Okay, so yeah, 9.88% on the day. And let me show you kind of like a longer story here. So right after 2008, you saw this mass rally, and you can see where the issues really started. So the acquisition, I forget when it exactly was, but I remember it happening 2017, 2016. But prior to that, this was actually appeared, at least on the surface, as a very good, very stable business, growing margins, growing revenue at a reasonable pace. It's another case study to go in your filing cabinet about the dangers of acquiring other businesses and why you want to be very skeptical or cautious.
Let me just, I just see a comment from Michael saying, I think that's saying I cannot see, unless that's a pun on something. Or I can see your screen. I don't know if can people in the comments just confirm. Can you see what Fabio's sharing?
I think they can now. They should be able to see it now.
Okay.
I was setting it up before.
Okay.
But yeah. So found them. I just keep finding them interesting because they continue to just be an abysmally, let's say, run company, and the turnaround story has not been kind to them. What they started to do as a part of their turnaround story, and you can see the desperation here, they started to sell off brands in order to get extra cash to pay down debt. And they originally, when they were pitching it to shareholders, was, hey, we're going to sell off these brands. We're going to buy back a bunch of stock as well. So as we shrink the business on the top line, we'll buy back stock on the way down. It didn't pan out, essentially. But
this is debt they have.
Yeah. So I'm kind of making you jump a few steps and not to waste your time too much here, but that's the long story short. And if you're interested in this company, just be aware of those risks before you invest. But there's definitely a lot more to it. And yes, Deuce, was that a monster that was correct?
No, it was a bubbly.
Because I have coconut water. So I'm going coconut water, no monster right now. But yeah.
No, I try not to drink like stuff like that too much. But no, so I just cracked a bubbly. I drink
All
like
right,
my
and
fizz fix.
that's how you get your fizz fixed. All right, so fizz is is their ticker fizz? LaCroix.
That's LaCroix.
I also found Intel interesting, so I've been kind of keeping an eye on Intel for reasons that members know. And the thing with Intel is I'm still kind of saying or seeing how they're progressing towards the goals that they laid out. The main important goals I care about is how they're positioning themselves to be the number two fabrication company behind TSMC. But I think they're progressing rather nicely there. Now, for some of these other companies here, I did also take a look at Enphase, just because the club members, actually, we did like a live reaction to the earnings. And with that one, there's a lot to discuss. I mean, in prior quarters, the company was already addressing the cost of capital issue, not necessarily with the company, but on a household basis. So with the, you could argue very strongly that if you're Fabio De Basio screwed me on Google, scum. Hey, strongman, how you doing? We got to do the Roo Rabble again.
Strongman, I listened to your Google earnings report, and I was a little disappointed when you said there was accounting trickery. I thought you were going to talk about the tax rate that they went at, not the depreciation. So I thought the tax rate that they had on the earnings was interesting. But anyways.
Oh, well, we could talk about that a little bit if we want to nerd out here.
Mm-hmm.
But Yeah, with Enphase, if you think about it, the solar projects that a household would partake in most of the time, they're going to borrow capital for that. And if you recall, I believe SoFi had a lot of their personal loan business was actually due to these solar projects. Not all of them, but a decent amount that they would mention it. And as interest rates continue to rise, well, that's increasing the cost of the household to borrow and pursue one of these projects for their home. And if you have let's say the pipeline shrinking on these solar projects, well, of course, then the end consumer, the end demand for Enphase products begins to come down. So that was already discussed in prior quarters. Now here, it's more so an inventory issue that they were discussing and a little bit of demand destruction down the road. So some of these other companies here, I didn't care for too much besides the big tech names that all reported this week. So of course, Amazon's of big interest to me for reasons you guys might know. Alphabet is one of the oldest holdings in my portfolio. And, as of late, I haven't actually added meaningfully to my Alphabet position in quite some time. We'll discuss that a little bit more later, what I'm planning to do with that. Microsoft was just, let's call it being just Microsoft. General Electric has actually done quite the transformation under the new CEO. So it looks like his plan has worked. And he's continuing to execute well. Northrop Grumman, my largest defense contractor, also continuing to just perform as expected. Nothing crazy there. L3Harris, I thought was a good earnings report, but the market didn't really seem to appreciate it near term, at least. But
They didn't
with
sell
the
off on it though, right? It was just kind of flat afterwards. I
yeah,
think.
it was flat. Market was about it. So you pull it up.
Whoops. Okay, yeah.
Yeah,
Actually, yeah.
it's
I
down.
mean,
It's down now to
that's Hamas. And then if we just go 5 days, I guess it's actually sold off a little bit, huh? On Friday.
Yeah. But nothing really of note. Then Raytheon Technologies. This one's at an interesting juncture right now with the Pratt and Whitney issues going on. So it's going to cost them between $3 to $5 billion as they go about fixing that. So it presents potentially an interesting opportunity there to buy some Raytheon. But generally speaking, we did have an episode for the club members about defense contractors and the opportunity. And we didn't know, of course, the Israeli issue was going to occur, but hey.
Yeah.
And some of these other ones, NextEra Energy, on the surface look interesting just from looking at the chart, seeing how far it's fallen. Because prior to the past couple years, NextEra Energy was a darling. If you go back into the 2010s, NextEra Energy was one of the hottest growth stocks, at least in the utility space. And when you say the word utility company, you don't think growth. Or, I don't know. Well, honestly, I'm reading some of these comments here. Investor X from commentary of GCP and AWS seems cloud pickup now. Azure Prob did well because of OpenAI integration. Yes.
Do we want to use as a segue into talking about the Google sell-off?
Yeah, let's talk about it.
I think that's a good
as a
segue.
segue into that. That's a perfect segue.
Because so I think no, Dan, we're starting the funeral for Google right now. Now, I'll say people know that I'm bullish on Google, and I don't think for me personally, this was something where the earnings report was something where I said, "Oh no, this changes my thesis on it." But whenever a stock that you're in sells off, you don't want to just close your eyes and say, "Everyone's stupid. I'm right. This is fine." So the problem that we have with GCP, I think the market has GCP. It's more of I think the market saying Google can't execute in some ways. So you have to go back to 2014, 2012, somewhere around there. Is that's when AI or large language models, these things started getting traction. And Google was actually the first one to say, hey, this is going to happen. We want to start getting all the talent and integrating them into Google so that we're the AI hub. And if you go back, you look like Google in 2014 starts talking about AI way before anyone else does. And So they go out and they're poaching all these guys from like Harvard and different areas to come work at Google. Well, then in I think 2018 basically is when one person from Google, or maybe it was a little bit, yeah, breaks off and makes OpenAI because Google made their AI framework public because they said, hey, here's this framework. We'll work on it. We'll all benefit. Obviously, you're going to say something?
No.
Okay. Obviously, the thought Google had was, we have all the best minds. We're going to be the ones to profit from this, though. Well, then what happens is AI comes out. OpenAI rolls out their products. And then this quarter was proof that OpenAI has somewhat leapfrogged, at least in the short term, Google on the AI front, on monetizing the AI front. And Microsoft is the one that, so Microsoft didn't put all this investment into it. Microsoft just said, these guys are going to be good. We're going to invest in them. And that's how they leapfrogged Google. And so I think the market's looking at it and saying, you had 10 years and this is all you can do. Like, they're kind of like, dude, like, how bad are you? How did you fumble this? Like, how did you have, you were out poaching people. You gave OpenAI the framework and they took your own framework and beat you with it. Like, that's kind of what's happening. So like, it's, I can understand, for me, it's not a game changer personally because at the end of the day, like, it's a free cash flow cow. I don't think that even if Microsoft's in front of them, I don't think this is a thing that's so narrow where one person's going to win. I still think there'll be a winner from it. And they're spitting out free cash flow and buying back shares, which for a tech company is kind of nice. And they're still growing their markets. I think YouTube is such an underrated product. And so I don't think personally that it's like a game changer, but so I see Prisley saying Andrew Marshall counter argument. Google has secured their moat with AI over the past 10, 20 years. That's what they did. Oh, their moat in search, are you saying? Just, and if you mean their moat in search, I wouldn't doubt that. But I'm saying, and I'm not saying that I think personally Google's a sell. I'm interpreting what I think the market is saying by selling off after this earnings. And I agree with you because the cash cow of Google, of Alphabet, is Google search. It's GCP is nice, and GCP is going to give you growth, but your cash cow that's going to enable you to buy back 15 billion in stock every quarter is Google search and YouTube, which I mean also a search function, but primarily Google search, not GCP. I'm just trying to say I'm interpreting what the market is saying. And the market is saying, how did you fumble the, like, how is Azure getting more cloud adoption than GCP when GCP had this before? That's how I'm reading this. And I would trust probably Prisley's take on this more than mine. he kind of knows his stuff, I think, in this field. But that's kind of been my interpretation of why the market sold off Google.
Google's valuation right now on, just some of the basic metrics, I believe they're the cheapest, if not slightly above Meta, compared to other big tech players. Now, that's really an apples oranges comparison because, for this example, we all know that with Amazon, you got to look a little bit deep. For full disclosure, so people might not know this. Well, they should actually, but I have a position in Alphabet that's known. But I'll ask Andrew, what is my main, let's say, excited or bullish stock right now?
Oh, it's Amazon.
Yeah. But when I say this, it's not because I dislike Google. But looking at Google relative to peers, its peer group, and when I say peer group, put an asterisk on that. I'm talking about big tech. They are trading at pretty cheap valuations. The only one that's cheaper than them is Meta, it seems.
Is Meta
So
still cheaper on a forward basis?
I believe so. I believe on a forward basis, Meta's like 20, just under 20, and then Google would be like 20, just above 20. But they're really close after the sell-off.
And to be clear to people, like, I'm looking at this as an opportunity within Google personally. I'm just saying this is my interpretation. I'm not saying that um, I'm questioning. I mean, my bigger thing is I would like to see Google cut another. This is going to sound terrible. I would like to see them control headcount more and cut some more jobs, or just like be more disciplined there. Personally,
You heard it here
that's
first. Andrew doesn't want people to have jobs.
yeah. Give me that reception. No, but like my personal thing I would like to see more is like you guys don't need. I mean, it seems like there's still bloat there. Personally, for me, that's a bigger thing that I would like them to focus on, and like would drive more value personally. There was a thing I wanted to talk about. I mentioned this, and for the record, I'm not hating on Strongman's video on Google. I thought it was good. I just got excited because I'm not like the best when it comes to taxes, and understanding tax uh, situations. But one of the things that I think made their profits look better, and let me pull up the transcript here because they said they only had a 7% tax rate in Q3. See if I can find it. Yeah, so operating income was 21.3 billion, up 25%. Net income was 19.7 billion. This reflects an effective tax rate of 7% in the third quarter from an IRS change related to the use of foreign tax credits, which had an outside impact on the third quarter rate because the change resulted in a catch-up for prior periods. So I think you might also want to normalize that and say, what does the actual... Thank you, Dex. Quit your... but so that's another thing where like maybe their net income looks higher artificially because if you adjust that from 7% to 17%, what that brings it down like to like 17 billion, 18 billion, some maybe 18 billion-ish, somewhere around there. So that's the one thing I think also I thought was interesting. But overall, I don't think in fact, I keep on hitting on this. The thing that I focus on more, I think is more impressive than GCP is YouTube. I think YouTube gets less focus from investors because they don't break everything out on it. Like they have it like the YouTube subscriptions. I don't think people realize how much a beast that is right now and how much revenue that's driving because it's shoved into other revenue.
Yeah.
And so everyone looks at YouTube ads and they're like, oh, well, just YouTube ads. Like, okay, it's whatever. I'm like, no, but if you take YouTube ads and you add YouTube subscriptions, I bet you that thing's growing at high teens, if not 20, in the 20% range.
Yeah. Yeah. Especially right now it's funny enough for everyone who kind of catching everyone up to date. We had a club call talking about, and Dan actually was on with us, a club call talking about how Google, once it starts to reach a certain point, they're going to go after hard on ad blocker. And lo and behold, I think it was the next week, everyone started noticing that ad blocker seemingly was getting attacked by Google every which way they could. And that I feel like is going to drive more people towards YouTube Premium. And I try to express that to people that if you're an individual who is consuming YouTube content and you're not watching the ads and you stop watching YouTube altogether, YouTube at this point doesn't look at you as a loss at all. If in fact they're saving money by not servicing you a video on their cloud for said cost. So because they're not getting any monetary benefit from you being there, and that's how they view it. Okay, same thing with what happened to Netflix. So Netflix, when it started cracking down on password sharing, a lot of people were complaining, and for some reason it didn't click to people that I know this is for more so the people who aren't invested in stocks in general, but because you guys could probably piece this together yourselves. What's the harm in losing a customer that's not paying you at all?
In fact, that's a cost center for you because you're paying
Yes.
for them to come on.
Yes, you're paying a cloud service provider to host your content, deliver the content to them, and they're consuming the content, but you're not getting any money back for it. So
And the other thing too is like, I know, well, I don't think I'm biased because I've had this for so long before I was even in Google, but the YouTube Premium offering, I think, is like personally an awesome offering. Also, you have YouTube TV. That's another thing we haven't even talked about, which, that's another.
I have a counter to this, but I want to throw this in here.
The result will get less ads, so premium will become less important.
I disagree with this entirely. If you look at the amount of people or consumers that are using that in the first place, it's very minimal. And so if, for example, hypothetically, all of the people who use it were to step off the platform, it would not have that much of an impact longer term. However, that being said, a lot of those people, there's going to be a percentage of that, let's call it 50% of the people who do use it, who will switch over, and maybe it's less than that, who will switch over to YouTube Premium. That's a net win because you're trying to offer the advertisement adverse client an ability to consume the product, but you still have a benefit to it, right? And that benefit being, some monetary compensation. So how much does YouTube Premium cost? What, like $12 if you
Well,
don't
I
go through
think I'm
iOS?
paying $12. It might be a little more now, but like also, it's not a terrible product by. Like this is what I've gotten since July 1st, so it allows you to watch videos ad free. You can shut your phone off or like turn the screen off.
Yeah, you
Listen
can
to
close your
anything.
phone and still
You
listen
get
to stuff.
access to YouTube Music, which depending on the genre you like, I think it's a worse platform than Spotify, but since it has everything on YouTube, depending on like how you like your music and how you like to listen to it, it can have music that Spotify doesn't have, and it can be better that way. And you can also download videos just directly onto YouTube. So a lot of times when I'm flying or going somewhere, I'll just download videos and I can just listen to them on the plane.
I see the price here, by the way, for anyone wondering. It's $13.99. It gets up there to 20. I think John Smith's saying it's close to 20. It's up there if you're buying it through iOS. So keep in mind that iOS, the iPhone, has a tax on it of 30%, and everyone who's online will pass on those costs over to you. They're not going to eat that. So if you subscribe to YouTube Premium via the web browser, it's going to give you that 13.99. And like I don't know if you said this, but you get a Spotify in there, right? It almost sounds like we're advertising YouTube Premium. Let's pause, but we're talking about it from let's call it product review from the investing standpoint.
So I can guarantee you, just John Smith, if everyone signs up for premium, the amount of money that Google will make off of YouTube is insane. So they get over 2 billion unique users on YouTube a month. You multiply that about $13. You're saying they're going to get 26 billion a month. I'll take that over ads in a heartbeat. So I don't think this is like cannibalization or an issue.
Yeah.
So like if premium becomes so successful, and what they'll do too, I mean, like Google's not dumb. Well, not, I mean, they're not. We just talked about them fumbling the bag maybe on AI. I don't think they fully did, but like if they see people signing for premium, what they're going to do? They're just going to raise the price a little bit if they're really worried about ads. I mean, so
yeah. I mean, from what you're really getting, wasn't it Spotify like $9.99 a month?
Mm-hmm.
So basically, I get Spotify, which I'm a Spotify customer currently, but for $3.99 more, I get all of YouTube as well on top of that.
I think just for podcasts and music, if that's all you want, I think Spotify is better. But if you also if you use YouTube a lot for things that are YouTube exclusive, like us, or just other things, other content creators that you like on YouTube, that's a better offering. Also, I don't really watch on Twitch anymore. I watch pretty much on YouTube because now, I most of the stuff I watch, if it's esports, it's like the big bigger events that usually have both a YouTube and Twitch, and the experience from YouTube is a lot better because I don't have ads.
Good. Yeah, because Twitch, I heard, spams you ads, right?
Oh, it's terrible. I'll get on Twitch and it'll be like ad 1 of 8. Like,
At
click
one of
off.
8, Amazon's just like, we have to milk Twitch.
Yeah.
Yeah, well, hey. All right, but
Fairpoint AC job. Yeah, a lot of not everyone's gonna be paying the US rate, but still it'll be a lot of money.
yeah. All right, we're just shilling YouTube right now. Music plus
But
education plus entertainment.
like in a succinct thing, I understand the sell off a bit, but I think it's exaggerated. Also, you got to remember Google's still up like 35% year to date. So it's not like this company's been getting crushed, you know? But I do think this is an opportunity if you're light on Google to maybe, especially, if they continue to sell off below 120 into the mid one teens, and down, I think it could be an opportunity to kind of pick something up.
This is the conundrum I'm having. What you're describing just now. I'm in the camp of not that I don't have Alphabet, but it's a decision of coming to terms with, do I add to Alphabet?
So here's the thing: it was funny. I kept on getting pings from people like, "Are you buying? Are you buying?" And I'm like, "There's so much noise going on. There's so many other things happening. You can't just look at this in a vacuum, right?" So yeah, like if people ask me like, "Are you buying Google?" Well, it's not like if I'm not buying it, I hate it and don't think it's a good value, and if I buy it, I love it. It's like, well, I mean, I guess if I buy it, I do love it, but if I'm not buying it, I hate it. I tell people like, I got to see what else is out there because it's not like it's the only thing that I thought sold off that didn't deserve to sell off. And so you got to look at other things and say like, where do I put my money? I mean, I know you think Amazon is still extremely cheap at its spot, and they're kind of executing the game plan that you thought they could execute. I think Meta had an excellent quarter, and it sold off after that too. Now I'd have to look at their valuation. I'm not currently in Meta. There's a lot of companies out there, that aren't just, it's not a vacuum. You have a limited amount of dollars, and there's tons and tons of stocks. And you got to figure out which one.
Yeah.
One that I like is Allison Transmission that sold off 10% after an earnings that I thought was pretty good. So, there's just things to weigh.
Yeah. John Smith's next comment right here, is one that actually we've been talking about for a while in the club, that Microsoft or OpenAI has won the perception game. And when the common person thinks of AI right now, they think ChatGPT, which for the people who are, let's say, better educated on AI within the club, they would argue or explain it's not real AI. But that being said, I would argue that companies like Alphabet and another one, Amazon, and others, but mainly Amazon, don't advertise it nearly as much. And so they don't get as much credit for it. There's a lot of divisions. Yeah.
I do want to add, on an absolute basis, GCP had the highest new add-ons to RPOs quarter over quarter out of the hyperscalers.
Just buy the stock now.
I'm just saying. I'm saying. I forgot to. Amazon went from 132.1 to like 133 billion. Google went from 60.6 to 64.9, and then Azure doesn't really break it out. But like,
that's my problem with Azure. They don't break anything out though.
Yeah.
So I'm always a little like, what? It's like a black box, but maybe it's better for perception. The perception game there is probably better. Because I know they lump in a lot of things in the cloud.
They do, but so does Google, I think. But I think Google's more like, I think Google's more transparent because they break out. They'll usually like in the ER breakout, here's Google Cloud.
Yeah. Look. Well, let's just go into our biases a little bit here, but yeah, no, actually, but unironically, BART is actually pretty good, and the integrations with Google products is also pretty good. They were actually hyping that up, but
I will say, like, I think Microsoft is a better executor than Alphabet, just on a flat basis,
Get
personally.
those words out of your mouth. No, I'm kidding. I know, yeah.
So while I might agree with you, I just it's hard for me to, like, if I'm betting Meta or Microsoft and Google going head to head, it can be difficult. Now, like many people have said, Google's not just playing this like the way Microsoft is. Google's kind of playing this to secure their advantage in search is a lot of people's point.
Yeah.
And so it's not necessarily like one person wins, but on the OpenAI versus Bard, we'll see how it plays out. But I think Bard is pretty good after that disaster of a rollout they had.
That was so botched. I mean, we can all
Also,
admit that.
also something that I thought was really funny is some of these companies get so what is the right word when you're afraid to say something that's taken wrong? Politically correct, PC. Did anyone like notice that Google doesn't ask you to whitelist them? They ask you to allow list them
Allow list them.
because whitelisting sounds like it's because what's the opposite of white? Well, then if you're not going to allow, anyways, it just to me was just like ridiculous.
Interesting. Oh, that's kind of
But,
cringe though.
yeah. So,
Yeah.
did you want to talk about one more before we like another stock or two that had an earnings, and then we can look ahead to the next week before we go to
Yeah,
the private?
yeah. The only one that I wanted to discuss a little bit, but I'll get in more detail in the private stream, is like Amazon, because we have some commentary for Amazon. But in general, I thought Amazon did really well.
Mhm.
And then I'm trying to think about what to say next before, because I want to save the other stuff for the next hour. But some of okay, so let me say it this way: on everything that I laid out as far as what I would expect them to execute on, it seems like they're doing it, and so I'm still excited to see how they progress. But yeah, I'll keep it at that, so we can move on to next week's.
Well, before we do, one I found interesting. Did you see how much Chevron sold off after their earnings report?
No, I haven't been paying attention to big oil or energy for a while. Let me check it out right now.
I mean, they're at 52-week lows, which is pretty surprising.
Interesting.
I haven't looked too deep into the earnings report, but
Well, they're acquiring a company, a big one.
um,
Like they're paying a pretty.
I know. But isn't it a take under though, or was that Exxon that's going to take under on a company? I have to double check. One of them was paying a premium. One of them was like not paying a premium. But they're paying it all in stock, maybe.
I thought both of them were paying cash. Wait, let me check. Because okay, no, Exxon is for sure paying cash. Who is? Yeah, no, right here. So it's apparently to do with Kazakhstan, assets they hold in Kazakhstan.
Pakistan.
Uh-huh.
That's why it sold off.
That's one of the reasons why. Apparently, there was a whole host of issues across their portfolio.
Yeah, it's one of those things that's interesting because like with the price that crude's at right now, I'm a little surprised that it's sold off that much. But maybe they do have a lot of like execution problems. Because I would have thought, I don't know, they would have been lower back in March.
Well, are you interested in energy?
XOM deal is all stock. Okay.
It is all stock?
Yeah, that's what Julius Caesar is saying.
Oh, okay. Okay. Never mind. I had that confused.
So, am I interested? No, I exited my energy like a month ago, but I still follow it because I think that people really swing too heavily one way and the other way with like commodities often. So I like to stay in touch with what's going on.
Mm-hmm.
All
right.
yeah.
Let's move on
Other
to
than
next week.
Yeah, let's move on to next week. So let me pull this up. I think it's right here. All
I
right.
saw your question, Kethan. We're going to talk about PayPal after the fact. Okay. Anything interesting here? I know what my favorite stock is here.
There's a lot of things that are interesting.
There's a lot,
here.
yeah.
So I think just for the general market, Apple will be interesting. I'm not personally in it, but I know that it has an impact on the market in general. Let me see. Because I think I have some stocks that aren't listed on here that are reporting next week. Zebra Technologies, interesting.
Yep, I was looking at that one.
Arista Networks, that's interesting. Arista, I don't know if I said that right. Cloudflare could also be interesting, as well as Fortinet. Builder's First Source could be interesting for sure. ST Louder, because haven't they still off a ton?
Yes.
Yeah.
In general, I mean, that's travel concerns globally, so not really a US issue, more of just global travel.
And McDonald's, I mean.
I'm going down the list. So this is what I'll be paying attention to. SoFi I'll be paying attention for entertainment with Dan. Shout out to you, Dan.
SoFi.
Yeah, SoFi, because I think to date, Dan and I, which we'll be discussing, are one of the few people on YouTube that have even made money. Like we've, realized profits on SoFi, and
Oh, really?
yeah, on trading, even though despite our commentary on it, and we have the receipts as well to back that up. Let's see. As far as public storage, just continuing the REITs, I'm not really interested in public storage though. Arista, yes, I'm interested in them because I want to hear what they have to say. They sold off after Meta's earnings, understandably so, because Meta is one of their customers. And the discussion around CapEx was really what dinged them a little bit there. But I want to see what Arista has to say. AMD, I'll be interested in them. I want to see what their forward projections are for the appetite of the market on some of their products. Paycom, yeah, I'll pay attention to Paycom for one reason. Let's see here. At Zebra, we already mentioned Zebra. So with Zebra, I'm gonna be paying attention to guidance, forward guidance. What are they saying as far as like future demand goes? That's pretty much all I'm gonna care about there because they're on my watch list. Let's see. PayPal. I mean, that one's gonna be
PayPal.
Yeah.
That's a drama.
All right.
Drama alert right there.
Julius, I'm selling GRNC on Monday. Thank you for letting me know.
Paycom would be interesting for me too.
Yeah.
AMD, Qualcomm
for the same reason as AMD. By the way, Paul bought Generac, so all right, I'm out of Generac Monday. I'm not holding. If that guy's bullish, so I'm out.
It could be interesting to hear from Penn National because like they just did a big move with Disney.
Oh yeah, that's true. That is true.
And then you got you can say it better than Meli, MELI. You can actually say the name of the company.
Mercado Libre?
Yeah, you can say it better than I can. I butcher it with my whiteness. Airbnb.
Yep, on my watch list. Well, watcher position. Let's see. Starbucks. I'll pay attention to Starbucks. I want to see how that Becky is doing. I want to see how Becky is doing. No, seriously, I want to see how Becky's doing. Crocs, yeah, because it's, I guess, talked about a lot within the club. I'll take a peek at it. Let's see here. Cinemark. I'm not touching. I'm not gonna care about Cinemark really. Although maybe Cinemark, I'll peek and glance into it to see how just movie sales are doing. But that's it. I couldn't care less about anything else.
Yeah, there's
restaurant brands, maybe.
There's a bunch of stocks I hold that like are not listed here, which I guess means I don't
care
buy stocks that are as much listed by or much held by retail. I don't know.
PayPal. Oh, there was that chart. I want to find that chart again. There was a chart that had all of the most, let's say, concentrated stocks by retail.
Yeah, someone just said Palantir. That's a good point. Well, I think this is actually a good gauge of what retail holds because, like, you can kind of see they organize SoFi, AMD, PayPal, Palantir over people like Shopify, Novo Nordisk, Eli Lilly. Pretty sure this kind of shows.
Okay. Let's see.
Whenever I hear people say that they like Palantir, I always ask, like, why not CrowdStrike? They're like almost the same market cap, kind of similar thoughts. I mean, like, you could say that Palantir is like more defense, CrowdStrike's more like personal, but I've never understood why you would buy Palantir over CrowdStrike.
Oh, but CrowdStrike still has government applications.
Right.
I mean,
That's what I'm
everything,
saying.
Yeah.
So I just don't get why people like. If I just pull this up real quick, let's see, Palantir stock. Have a 32 billion market cap. CRWD stock, 31 billion, so a little bigger. And then if I just pull up, sorry, I'm going on a rant here.
Very good.
I'm just gonna pull up ticker real quick, and
Trying to see.
and yeah, I understand that. Like,
oh my god,
there's none of these stocks where retail owns the majority of it. So if we,
looks like Palantir is still number
so
one.
look at the revenue change year over year. So you have, I mean, oh, estimates are having Palantir's revenue accelerate. That's interesting, or that revenue growth. But like you have Crowd, who's probably going to stay elevated over them. I mean, 20 to 25% is a massive delta 2028. And I think if you look at those in raw numbers too, I'm not sure who's. They're about the same. And then if you go on a valuation basis, like free cash flow. Why are you buying Palantir over CrowdStrike? I just don't get it. But it's what it is.
Well,
I just want to.
Palantir constantly makes it to the number one spot in retail.
Yeah, but I'm just saying I don't. From a fundamental basis, I don't get why you buy CrowdStrike over Palantir, or I don't get why you buy Palantir over CrowdStrike.
Because you don't get it, because as ACJOB, it's the future. That's why. So you don't get it. You just don't get it.
I generally always trust companies when their CEO comes on and says, our TAM for AI is the entire world, or something like
Did he actually say that? Oh, he pulled a...
I can find the actual quote, but it was like something so bombastic. I'm like, what?
Oh, Humana's reporting on Wednesday. I didn't see them. Humana is now... so with Humana, I pitched them not too long ago, actually, for the club. And now their sister... They're not really sisters, but ELV looks like a better, more compelling buy to Humana, because Humana, that one's kind of played out. That sell-off was unjustified. I didn't see them there, but that one's kind of done for the most part. Yeah, that's really all the ones I'm interested in, at least that are on this list. So
yeah,
no, we didn't talk about the REIT earnings, but we'll talk about that, I guess, in the club.
Yeah. How are you feeling? We got like a little less than 10 minutes.
We can talk about our, how we're gonna I guess, position ourselves, our portfolio changes, just like broadly speaking.
Well, that's what I was gonna ask you is how are you feeling broadly after like the first couple weeks of earnings? How are you feeling about, I guess, the market in general, or like the state of the economy in general? I guess, and that should translate to the market.
I mean, I don't really care what I think. I'm looking at least still how, different institutions are reacting. Depending on who you ask,
Hmm.
they're more cautious than not. And we're kind of seeing I think you talked about it the other day, like a rolling recession. We see
Hmm.
recessions happening in different sectors. So if you asked me, just looking at the state of the economy, looking at the service sector in 2023, I would tell you it's booming. People are, going nuts out there. If you ask Dollar General, hey, how's the economy? They'd tell you the consumer struggling. We can't raise prices as much as we could before. They can't handle it. So depending on who you ask, you'll get a different response. If you kind of look at it from, where energy prices are at right now, um, cost push inflation still kind of a concern for some. I'm talking about CEOs. If you ask Bank of America CEO, he's been so bipolar on this topic. It's kind of crazy. Okay, wait. Let me pull back. Not that bipolar, but he's been decently bipolar on this topic. So
Hmm.
he's kind of swayed from consumers amazing to consumers cautious to back to consumers amazing.
Right.
Right. JP Morgan Chase has been rather cautious. You ask Jamie Dimon, at least publicly, what he's been saying. If you look at what the bank's been engaging in terms of loans, they've recently actually extended the duration side of their portfolio. But I would argue that's kind of a bit just more cautious or taking advantage of these yields. At the very least, they're putting money to work, insinuating that yields have potentially topped, or at least we're not going to go too much further from here. And they're putting their money where their mouth is in that respect. Bank of America better, I guess, hope that things are, okay for a near-term performance point of view. But yeah, this is also true. This is so dumb, no one knows. By VT, this is absolutely the approach you could take.
I think it's a completely fine approach. I think it's a bit of a the tone there is kind of interesting, but um, like it's a fine approach to have where if you want to go on the internet and have someone tell you what stock should I buy, and you don't actually want to do any work or do anything other than that, please get off the internet. Please go buy some kind of index and save yourself a lot of money because um, I think the term that someone came up with was dance monkey dance. Like, tell me what to buy. Tell
Bacon.
me what to buy. Yeah.
Yeah.
And dude, you're not going to pay someone $10 a month or even for $1,000 subscription. That person, just by listening to them and like buying stocks that they say, is you're not going to get anything of value. If you're just doing that thing to get someone to tell you buy this stock, then like get out and buy an index. And also, as a general rule, I'm sorry, bit of a rant. Don't put 100% of your funds. Bacon St. Dance Monkey Dance. Don't put. Don't be an idiot and put. Well, I'm talking probably the person who might have been an idiot that's done this, but and put all of your money into individual stocks when you're completely unproven in the market and don't know what you're doing. If you want to do this, I fully suggest like primarily being in index funds and then having this because I think that there's actually a lot of benefit to only having, even if it's only 10, 20, 30% of your account in individual stocks, there's a benefit of actually being um, more involved or focused on this, and that in your mind you'll prioritize it more and probably be way better off than the majority of Americans. But like that's another psychological point that we could talk about. But And thank you, AC Job. That's the exact kind of diversification I'm talking about. 50% Palantir, 50% SoFi.
It's diversified. There's two
It is,
positions.
yeah.
It's
But
not all in one stock. Yeah, like, because why would I take the risk of putting all my eggs in one basket like VT? You know, that's one stock. Makes
I
no
mean, I
sense.
agree. Like VT, like why would you just like so much concentration?
All
It
my
should be
money in
like,
one stock.
yeah, what you got to do is like focus on maybe some like dividend paying ETFs, some other ETFs, and then like try to get that yield, and then the dividend snowball. And I'm just trying to trigger people now. Uh, but
I'll say, taking a step back, broadly speaking, I am. Wait, did I say small direct? The 75% small direct club. I'll say that generally speaking, I'm constantly optimistic. I'm kind of one of those guys that's a permeable because of my age. So I have so much time on my side. Even though the
okay, can we like really quickly? Can you just get rid of like this spam that's in the or?
is that spam? I don't know if it's spam. It looks like spam, but I don't think it is spam.
Okay.
It's just like, just ranting about the dollar collapsing, which I
Yeah.
don't believe is going to happen. I'm bullish on Tesla in the big seven. Oh, well, yeah. But okay, so generally speaking, I'll say, even though I have a decent sized cash position, because club members, you guys basically already exactly know how much, but I would argue I'm just looking for the next big opportunity, and I'm just shuffling around positions, trying to optimize the best I can towards my current big ideas. And it might be assumed by looking at the cash position I've held for, I guess, now several months. I would be bearish, but I'm not generally bearish. I just cleaned up the portfolio a bit, took profits on some things, cleaned out some distractions, and then also had more contributions in general. So that being said, I'm kind of playing about how to pace the buys. And I'll say it because I tweeted this out, I think over 2 months ago now, that it's either a month or 2 months ago that I tweeted this, but having yields where they're at now actually makes it quite easy to be patient, because you get that, interest payment at the end of the
Mm-hmm.
month. And it's quite nice when you get an annualized yield above 5%. So it makes it a little bit easier to just kind of relax and take a chill pill. So seeing here, I'm 100% VT. I focus more on putting more aside to invest and chasing returns. That is a good way to do it. For
Yeah.
the most part, most people are going to be successful that way.
More successful than a lot of people that are trying to pick individual stocks.
Precisely. You will outperform the vast majority of people who are on YouTube. That's for sure.
Yeah. I can't believe. Well, we're running out of time. I just can't believe the amount of idiocracy that you can find on YouTube very quickly, very easily, in
Oh yeah.
regards to finance.
Oh yeah.
Anything's like regarding finance or like financial education, things like that. Like just
Whoa. Who's
it was a pun. Uh,
yeah.
but
Well, other than that, are you buying? You don't have to say the stocks, 'cause we'll talk about that in the club. But are you buying stocks now, or are you just kind of just waiting, hunting? Are you in hunting
I
mode?
I it's not like I've circled and said I am buying this stock. I have put like I have money that I'm going to put to work. I think this past week was really busy for me, so I didn't have time to like go through and say
Same.
this. And plus, there's a couple earnings that are big for my port that are coming up this week, and so I kind of want to see how those play out before making a decision on anything. A lot of people also like think you need to buy the second a stock drops like 2%. It's like, dude, there's a
Mhm.
pullback. Why aren't you buying? Then someone messaged me. They're like, why aren't you buying? This stock is down. I thought you liked this stock. Why aren't you
How dare
buying it?
you?
Like, dude, like taking a chill pill. So
Yeah. I feel like a lot of people get really angsty. They let their emotions get the better of them in
mhm.
investing. Um, and oftentimes, I mean, it's funny to see people also say, "I'm not going to be that guy,"
Yeah.
when shit hits the fan. And then when shit hits the fan, they are that guy. It happens every time.
Every time.
Every time.
Well, yeah, it's like the whole like those are the same people that quote like be greedy when others are fearful and fearful when
Yeah.
others are greedy.
Yeah.
And
Yeah.
so
I would argue there's some asset classes. You guys can guess which ones they are, but there's some asset classes out there that have underperformed for 1 or 2 years, and it's just dismissed entirely. It's like, oh, it's trash now.
mhm.
It's like, what? We're being very selective with the years that we're talking about. I'm that guy.
Hey, but if you know you're that guy, that's such a massive step because then you're saying, okay, like I know my actual emotions. There's people that don't think they're that guy, but they are that guy.
But they are that guy even with an index fund, which is why even I think when
Right.
JP Morgan put out the data, even with index funds, the average investor does poorly because when their index goes down, they either panic sell or they don't add more. And then when it goes up a lot, then they start adding.
Can I tell a really quick? This will be the last story we have and then we'll
Mhm.
go private. So to illustrate your point is in my day job, which is that there's a lot of funds that I will say manage. And someone came to me that was on the board of one of the entities I manage money for. And this is when we were worried about the debt ceiling issue. And I was not worried about it at all. But he comes to me, he's like, I think we should sell everything and go to cash. And I'm like, no. Why would we do that? He's like, well, like what if that because he was telling me, he's like, if they don't have the agreement, then what's going to happen is the market will sell off like 5 or 10%, and then we can jump in and we buy everything cheaper. And then, if nothing happens, then we don't need to worry about it, and we'll just buy back in right away. And I was like, you're trying to time the market right now? Like, and if you look, actually, I think at that time, like the market ended up going like up 4% really quickly, like before that date. And not that like, but like the point is like you would have underperformed there. You would have bought this thing, you would have underperformed. And then the funny thing, and so he's talking about like selling everything. And then same person comes to me like a month later when the stock market's just flying up, and he's like, I just want to hold. I think we should just hold Apple. Like, why? I'm like, no, we're indexed. Like that's what we do. And he was like, no, I think like Apple's a good company and all this. And I was like, so was Enron. And he's like, no, but this is different. And like, but like, just to your point, this is how emotions and retail investors get caught up in this up and down. And so if you can stick to buying an index and not trying to get cute, and I swear every single person I know, I like one of the jobs I do sometimes, it's just talking people off selling, saying, man, it's bleak. Everything's going to crap. I'm like, yeah, so you're gonna hold the stocks.
That was one of your board members?
I'm one of the organizations, yeah.
Oh, okay. Yeah, sometimes, yeah, you have to be the voice of calming them down, saying it's okay.
Yeah. It's funny because that like right after that I called another one of the board members and he and I were just like kind of laughing about it. We're like, I can't believe this. He's like, dude, it's nuts. I know. So anyways, but so that's it. I think I don't know if you have anything else to say before we go to private.
No, I think that's it. So for club members, be on the lookout within the club for the link, and then we'll get started on that. So we'll get into a little bit more of the earnings reports here, and then we'll talk about some of the newer, I guess, initiatives. But with that being said, thank you guys so much for watching, and we'll be seeing you guys again. It's been some time that I haven't been doing public content. Again, because the few time I do the private content, but I want to be getting out there and doing more public content again, because it is fun. I do think it's fun. What's going to happen to our MMM shares once I spin off the health segment? Not to take those shares. I have to look into that. I can't comment on something like that just off the cuff. But MMM is not very material to myself. All right. With that being said, thank you guys so much for watching, and I will see you guys on the next one. Bye.